Let's see. I think we're going. Hey, what is today? December something. It is December 6th. Though I guess you know that if you're watching it. Coming up on the holidays, getting in my weekly stream, still keeping it going. I'm Lewis Weil at Money Positive. I'm a financial planner, and I try to cover a different topic every week as we figure out what exactly it is I'm doing here on Twitch or YouTube if you're watching this later. The topic today is going to be kind of focused around who are the different types of financial professionals and how do you decide who to work with. My colleague in the co-op, Kate Herman, who will be joining us in future streams, asked what should someone be looking for when they're looking for a financial planner. And so I want to talk about that and take a step back and define the different roles and who, what is a financial planner, who should be working with one, and who are the other types of financial professionals. Because oftentimes people, when they hear that I'm a money guy, ask me all sorts of money questions about taxes and laws and organizations and stuff. And I'm kind of a generalist and can help with a lot of stuff. A lot of financial planners are. I'll dig into this more later, but financial planner and financial advisor are used a lot interchangeably. Honestly, I use them interchangeably. I think I tend towards financial planner. But someone like me is kind of a generalist and helps with a lot of stuff. We work with a lot of self-employed people to help them figure out their businesses so that we can figure out their personal finances. But someone like me, I don't do taxes. I'm not a lawyer. So when a lot of times people have tax questions, and there are some important differences in the types of professionals that you might work with for a business and for taxes. The most important, or the most maybe common of which, well known, is a CPA, which is a certified public accountant. That is someone who has taken some very difficult tests to get certified as a certified public accountant. And the distinction is that they can represent you in front of the IRS because they have that distinction, which is important because that is one of the few times where you're dealing with a legal entity that it could have real consequences. The IRS is very good at their job. So you want someone who's very qualified doing that stuff in case they need to talk to the IRS on your behalf. Which includes filing. The other type of person who could do that is what's called a registered agent, which is someone who has I don't exactly know how they get their clearance to do it. It's not the same threshold that a CPA does, and I believe they have to have their work signed off by a CPA. So if you're doing taxes, your odds are good, and if you're dealing with taxes and tax professionals, really want to be looking for a CPA or a registered agent. We do our taxes with a registered agent. They're fantastic, but I also know that they get their work signed off by a CPA first before they can send it off to the IRS. But people confuse CPA because it has the word accountant in it with an accountant, or I try to use the word bookkeeper to separate to be more clear about the difference, because they both have the word accountant and do accounting. A lot of times people say I don't hear from my CPA very often. They don't write me back. I only hear from them once a year. And actually that is pretty common because a CPA has a very difficult job. They work very hard a few times a year on tight deadlines, and they have a very specific role of taking care of your taxes, filling them out, and representing you to the IRS. They don't do the day-to-day stuff. That is what a bookkeeper is for. So often you'll end up, sometimes the CPA and the bookkeeper are the same person, but more often than not, the CPA just does taxes, and the bookkeeper is the one who does usually your QuickBooks, or if you just do your own spreadsheet, that looks at like what has your business brought in, what are its deductions, and they take that information and then they give it to the CPA, which is why it's so important to be doing it throughout the year, and why working with a bookkeeper can be really important, because a CPA is going to charge you hourly, and they're very expensive. So you want to have your books in really good shape. So working with someone who is a bookkeeper in addition to your CPA, or asking if your CPA office has its own bookkeepers who can help you throughout the year and answer your questions, because that's the type of person that you'd be interacting with. It is not unusual for CPAs to be fairly low communication and hard to get a hold of because they're very, very busy. That said, oftentimes what I've noticed happening, having now done this for 7 years and worked with different CPAs, often you get someone who's starting a new CPA practice, they're able to take you on, you become their client, and you might be their client for life, and they don't take new clients, or they are hard to engage with new clients. So finding someone who has a new practice that you're a good fit for, not to say all CPAs are like that, but it's not uncommon. So that's on the like tax and business side. For what we do, generalists, financial planners, our specific, our real title is investment advisor representative. That means that we have passed a series exam that lets us give advice on stocks in exchange for money. That is the regulated part. If you give someone advice about investments in exchange for money, you need to have passed one of these tests. For mine, it was the Series 65. That's what our investment advisor representatives take. And other types of businesses have different series, but we're not going to worry about that. And that lets you, you have to register with the states where you give advice. Or if you're a bigger company and have a certain amount of, I'm sorry, I'm recovering from a cold. You might register with the SEC. We're registered with the states where we operate, and they keep an eye on us to make sure that we're on the up and up, which is an important distinction, because sometimes you'll see what are called people referring to themselves as financial coaches. That is an unregulated title. And that is an unregulated person. And which means that they don't have to have any certain like certification. They don't have to, they can just call themselves a financial coach, a money coach. And there's some really wonderful money coaches. In fact, we will have at times money coaches, financial coaches on our staff who do everything but help with investment advice. But you have to be careful, because a lot of times I see financial coaches who don't realize that they're not supposed to be giving investment advice, doing it anyway because they don't realize it's regulated, and you don't know that they're I'm so sorry, not actually qualified to be doing that, and they can get in a lot of trouble when they get caught. So if you're doing that, don't do that. Work with someone who has ask someone if they are certified, if they are an investment advisor representative. It's confusing because we work at what is called a RIA, Registered Investment Advisor. So like Money Positive is an RIA. I am an IAR at the RIA. Don't need to absorb that. I just think it's funny, and it took me a long time to remember which one was which. So someone like me, and there's a handful of other folks that do what we do, with like advising with budgets and, you know, getting rid of debt and savings and working people up to a place where they can be doing like putting money into the market for their retirement. But most of the time, financial planners and financial advisors are more what I would call an asset manager, someone who actually like does the investing management and moves your money around for you. I don't do that. I give people advice about how to do that. I will hang out with them while they do that and say, yes, you are clicking the right buttons. But there are people who say, hand me your money. I'm going to turn around and invest it for you. Those people, asset managers, are often very expensive. They charge percentages of people's assets. They usually have asset minimums, like only if you have $500,000 or more will we work with you. We don't have minimums. But those people, there's a time and place to work with an asset manager. If you have a high net worth in the like mid six digits or millions and have like interests in different businesses or properties and need to be very strategic about where you're putting money and timing and taxes and stuff, having an asset manager can be really helpful, but can also be a lot of overkill because a lot of times people go to looking for financial planning advice and they end up with an asset manager, and all an asset manager really does is tell you where to invest and when, which again can be a very valuable service for people who are more complicated. But for someone who's just trying to open their first Roth IRA or get out of debt, that's not the right person most of the time. And they have to do that because they make their money by charging percentages of people's assets. We don't do that. We just charge our flat fee, which is $60 for individuals and $80 for couples or more. And so knowing what you need is how you should find the financial professionals that you work with. And once you identify what kind of financial professional you need, you really need to be asking, how do they make their money? There's wonderful people doing all sorts of different models. So like, who do you vibe well with is very important, but never be afraid to ask someone how they get paid. A lot of financial planners will also sell insurance. And so they have a lot of incentive to get you to buy insurance policy. So ask them, what do they get commissions or cuts from the things that they advise on? They might get percentages for getting you to do investments. So that's actually a good point. Asset managers, because they have incentive, because they get paid by how much you have in investment, they have a lot of incentive to keep you invested. So they have incentive to have people not retire or to buy property. They want to keep people in the stock market because that's how they get paid, which is why to us it was very important that that's not how we get paid. So always ask people how they get paid and make sure that you're comfortable with that. You can check. All investment advisor representatives are supposed to provide what is known as their ADV Part 2 brochure. You can look that up on BrokerCheck and see there's an investment advisor's marketing website, and then there's their ADV. Their ADV is where all the truth is and shows who they work with, how they give investment advice, and what their fee structure is. So if you're not sure, check that. You can check ours. Our CRD number is 218518. You can look us up, or you can just type in Money Positive. You want to, all investment advisor representatives are supposed to be what is known as a fiduciary, which is a legal obligation to do the best thing for you as our client. But the legal definition of fiduciary has kind of gotten whittled down over time. And so often it's just doing what is a good thing or not a bad thing. So, ask someone whether they are a fiduciary, whether they have a fiduciary duty to you, and ask them to say what that means to you, to them. We take fiduciary duty very seriously. We built Money Positive around being able to be fiduciaries. That's why we don't have do asset management or sell products, because we don't want to have any incentive to lean on those products. We charge upfront. We're very upfront about what we're going to charge. So, which is also common, like with places that are called fee only. Fee only doesn't mean that it's just cash based. It just means that they're not being charged by commission. They might get their fee only as a percentage of your assets rather than a commission for selling certain products. So fee only is important, but it doesn't always mean what you think it will mean. And fiduciary is very important, but there's the legal definition of fiduciary, and then how does a certain investment advisor and how does a certain company make sure they're fiduciaries. And it's the reason we're a co-op. I think it helps us be better fiduciaries because we are more accountable to each other, and I think as a result accountable to our clients, because even as investment advisor and CEO, I'm still accountable to the rest of my team. If I'm doing something dumb and want to do something that is not in the spirit of our mission, there are people who can hold me accountable, in addition to being held accountable by the states where we work. So yeah, I think those are the big things. Knowing what type of person you need, what type of financial professional, whether it's a bookkeeper, a CPA, oftentimes, sorry, this is such a tangent. A lot of times, maybe talk to your therapist about your money issues. A lot of money issues are from in here and in here. So we help people work through their issues, but oftentimes someone who might help you get over your fears and anxiety might be your therapist. I'm not your therapist. I'm here to help. I'm here to be reassuring, but I'm not a therapist. So figure out who and what type of skills you need, what their fee structure is, how you want people to be very transparent about how they're going to get paid, and you need to be comfortable with that. You need to vibe with them as a person. If you don't vibe well as a person, you're not going to have good interactions, and we can only do as good a job for you if we have your trust and transparency and get good information from you in a timely manner. And then asking them if they are a fiduciary and see how they respond and what being a fiduciary means to them. If you have any questions about this stuff, send me an email, Lewis, Lewis, at moneypositive.com or info@moneypositive.com. And we're always happy to help if you need our type of help or if you need referrals to other professionals. We know lots of wonderful people, and we're happy just to point you in the right direction. Hope everyone is staying safe and warm. Wash your hands, stay home if you're sick, and stay money positive. Thanks, y'all.